Hello and welcome to this week's LOLC Securities Weekly Market Roundup. I am Tharindu Amarasekara.
And I am Mirai Consulting, and this is the sound of profitability. Showing signs of recovery, apparel exports saw a spike in August, enabling the industry to make a year-to-date performance positive for the first time. In July, apparel exports rose by 3.2% to $406.2 million, and the total in the first 7 months amounted to $2.612 billion, which was down by 0.7%. According to sources of the Joint Apparel Association Forum, exports to the US saw a 22.9% increase to $209.4 million, while exports to the EU rose by 18.84% to $140.51 million. The shipments to the UK increased by 17.74% to $62.39 million. The exports to other markets rose by 31% to $73.32 million.
Outgoing Power and Energy Minister Kanchana Wijesekara says he leaves the institutions under his purview at a very strong financial position with adequate stocks of coal and petroleum products for fuel supply and power generation.
The current stock levels reported are at 123,888 metric tons of diesel, 13,627 metric tons of super diesel, 90,972 metric tons of 92-octane petrol, and 18,729 metric tons of 95-octane petrol, along with 30,295 metric tons of Jet A1 fuel.
Sri Lanka's reaching of agreements in principle towards restructuring approximately $17.5 billion of commercial debt is a pivotal step towards achieving debt sustainability, according to the Advocata Institute's chairman, Mr. Murtaza Jafferji. Meanwhile, the IMF has expressed optimism towards working with the new president of Sri Lanka, Anukumara Dissanayake, and has mentioned it will announce the timing of the next review of the program in due course. On the same note, the shareholder and investor optimism was noted in the Colombo Stock Exchange on Tuesday, 24th of September, as the all-share price index increased by 239.88 points, which recorded a turnover of 2 billion rupees.
A significant portion of the restructured debt will begin to mature in 2028. Currently, in the selective default rating category, Sri Lanka aims to, over a time period, reach the CCC status, indicating some stability in the finances. Sri Lanka's international sovereign bonds are currently yielding around 6.5% to 7%, which, if continued, will be an added cost to the administration. Also, the disbursement of around $360 million USD by the IMF was put on hold until the end of the elections, which will be carried out after discussing with the new government.
Time for the corporate highlights of the week.
Japan-based regional consulting group Mirai Consulting visited Sri Lanka to explore potential opportunities of investments across different sectors, and they were represented by a very high-level delegation which even had meetings with the EDB leadership.
During the visit, the delegation met the chairman of EDB at the EDB headquarters to discuss potential collaborations and partnership opportunities between Sri Lanka and Japanese businesses. The team, led by the company's chief operating officer, Okada Atsushi, engaged in meetings with the board to assess Sri Lanka's investment climate and potential projects to gain insight into the country's evolving economic landscape. Expertise in various sectors, including business strategy, market research, and human resources, makes this group a high-potential investor for Sri Lanka.
DeltaSpike was awarded the Cybersecurity Outreach Provider of the Year Award at Malaysia Cybersecurity Awards. In addition to receiving the prestigious award, DeltaSpike also signed a MOU with Cybersecurity Malaysia on an industry collaboration framework and implementation of cybersecurity initiatives. DeltaSpike's presence spans in multiple countries with offices in Singapore, Malaysia, Sri Lanka, and Australia, serving over 100 clients with tailored solutions and a proven track record of success. DeltaSpike is a joint affiliate company of diversified Sri Lankan conglomerate Limra Holdings Limited.
And here is this week's international highlight of the week.
The US Central Bank has lowered interest rates after more than 4 years with a larger than usual cut. The Federal Reserve reduced its target for its key lending rate by 0.5 percentage points to the range of 4.75 to 5%. It will be a relief to US borrowers who have been dealing with the highest interest rates in more than 2 decades. Wednesday's cut was larger than many analysts had predicted just a week ago, and the bank's forecast signaled that rates could fall another half percentage points by the end of this year. Federal Reserve Chair Jerome Powell said the aggressive action on Wednesday was intended to make sure that high borrowing costs put in place to fight inflation would not end up hurting the US economy. The unemployment rate in the US has climbed to 4.2% from 3.7% at the start of the year as hiring slowed. Projections released after the meeting showed officials now see inflation falling faster and unemployment rising higher than they did in June, with the jobless rate expected to hit 4.4% by the end of the 2024.
And that's it for this week's LOLC Securities Weekly Market Roundup. No matter what investment decision you make it with the right intent. We will see you in a brand new week.